75% of crypto traders in the US do not report all their crypto income to the IRS. If that's you, you need to listen to this video. The noose is being tightened around you, and I want you to know about this because you have a limited time to get current with your crypto filing. Up until now, the IRS has struggled to get insight into how much your trading activity is. But now, because of the 1099 DA that's coming out this January 2026, it will start to inform the IRS of all your sales and exchanges and transfers that happen on US-based centralized exchanges. Now, some people might be out there thinking, I can just avoid that. I will not use US exchanges. I'll do everything on foreign exchanges. Maybe there's no KYC on those exchanges. Maybe I'll do it on DeFi. Starting in 2027, at least 90 countries will be doing the same thing that the US is doing with the 1099 DA. They call the crypto asset reporting framework. And it basically obliges crypto exchanges in foreign countries to collect KYC to know the tax residency of each taxpayer and their tax number. And then they're going to report to foreign countries what these taxpayers are doing on their exchanges. Let me give you an example. Malta, which is part of the EU, is a signatory to this and has to oblige exchanges to do this. So Binance is headquartered in Malta presently, and they would now have a KYC obligation on all its clients to know for certain what country they're coming from. So this would be a significant change in the privacy that people have enjoyed before. So when they report, they're going to report every single sale, every single exchange, every single transfer. There's no de minimis amount. Even if you do it for $1, it's going to get reported. The really important thing is the transfers. The transfers will report what was transferred to and to what address and from what address did the transfer happen. So this is going to give the IRS insight into the wallet addresses that you control. What's really chilling in the recent Roger Ver case, also known as Bitcoin Jesus, in the indictment, the prosecutors describe how they used wallets to trace the movement of Roger Ver's Bitcoin to paint not only a picture of what wallets he controlled, but also to reconstruct the size of his portfolio going back 10 years. So this is significant, all right? So it's not possible to hide anymore. The IRS, once they get a hold of a bunch of your addresses, they'll find the other addresses, and then they can go back to prior years and decide if you have reported sufficiently accurately the amount of proceeds you had from sales. So this makes everybody who's not currently reporting their crypto at significant risk. The next thing is that the IRS is shifting to something I've been talking about for several years, is that it's far easier for the IRS to come after non-compliant taxpayers through criminal indictments than it is to actually do an audit. Audits take a long time. It involves trying to figure out exactly how much gain you had, how much tax that would be. Whereas a criminal indictment, all they have to do is to prove that you had income, that you didn't report the income, and that you did it with some intent. So tax evasion. They can hit you with 5 years in prison for each year that you did this, a $250,000 fine. Once you're hit with an indictment, all that's left is the plea bargain, because it's very clear you had sales and you didn't report these sales on a line-on basis on your tax return. And for many people, you're limited to modifying a tax return. You can only go back 3 years. The IRS can go back as far as they want using this method. In the case of Roger Ver, they went back 10 years, and they got him on activity he did 10 years ago. So who is safe? Who is safe? Now is the time. If you're a non-compliant crypto reporter, is to give our office a call. Let's put a plan in place to transition you into full compliance. Your future self will thank you for doing that. Go to cryptotaxaudit.com and you can have a confidential discussion to help get yourself back on track.